part of your portfolio, the largest part, should be in capturing these long-term trends. They're easy, you don't need to do anything. The trend is, like in crypto, is so powerful because the returns are so high. We've never had this before. The further you're out on the risk curve, the less likely it just accumulates over time, like Bitcoin does, which is the closest end of the risk curve, the least risky of crypto assets. So when you go that far out, they tend to be boom busts, and 1 out of 1,000, 100,000, 1 million actually scales to something much bigger. My mental model of I can make 100x and just come in a bit and say, can I make a 5x? Can I make a 10x? Now, in normal markets outside of crypto, that's monstrous returns. In crypto, that requires you to hold Bitcoin for 2 years or 3 years, or to find something in the top 20 that's moving, do it with 10% or less of your portfolio. And 90% or more, you put it in the highest quality names and let the trend work for you.
Raoul Pal says the next 2 months will decide everything. The Real Vision founder believes we're standing right at the edge of the most explosive phase of the entire crypto cycle, where liquidity, debt, and adoption all collide. As governments print, refinance, and ultimately inject liquidity back into the system, Pal calls it maximum money printing mode, the same pattern that's preceded every major Bitcoin surge in history. As rates come down, that liquidity has to go somewhere, and Pal says the first stop is always Bitcoin, then Ethereum. Bitcoin leads as the institutional safe haven, the macro hedge against currency debasement. And once confidence builds, capital rotates into Ethereum and the rest of the network economy. He's been warning investors not to confuse volatility with weakness. Bitcoin has delivered 144% annualized returns across every drawdown since 2012, even after 70% corrections. Ethereum's long-term performance has been just as strong, compounding faster each cycle as adoption grows. For Pal, it all ties back to liquidity and network adoption. Every time global M2 expands, crypto outperforms. Every time liquidity slows, we consolidate. And right now, he says, the indicators are turning higher again, signaling the start of phase 3 of the banana zone, the high momentum stage where prices can go parabolic. His base case, Bitcoin revisits $210,000 as the ISM climbs above 52, $400,000 if confidence reaches 57, and potentially $800,000 if the business cycle stretches into 2026. Ethereum, meanwhile, is expected to outperform, repeating its historical pattern as network activity accelerates. Pal calls this the greatest macro trade of all time, a structural shift bigger than tech stocks in the 90s, because when liquidity floods back, only 2 assets have consistently beaten debasement, technology and crypto's curve is steeper.
Most other things we trade are cyclical. Okay, so let's say you've got a reasonably fast-moving asset that's proven and is towards the Bitcoin end of the risk curve. Then you know over time that your best bets are going to be to try and buy the dips and then flip them out when it makes new highs, because you've got the skew of the market's directionality. So I understand why you came for the 100x, and that's a statement about what you want out of your life. That's okay, but really, you can make your life a lot easier if you truly are trading to make money. A lot of people actually just trade for the adrenaline. I've looked at this and said, okay, we've got these massive megatrends, crypto, technology. They go up over time. They're the fastest, crypto particularly is the fastest growing asset in terms of performance in all human history in the shortest period of time. Take that opportunity and use it, because if not, you're going to regret it. We've also got endless new markets because of crypto. 1 million tokens. You can trade a lot of things. Prediction markets, yes, they're highly correlated. So how fast will that capital start to come fully into this? Everyone's got time. There's no need to panic. But then you think about it. If you're betting on a human-to-human experience, there'll be ways of doing it, but you're not trading markets. You're trading different things. The other thing that we're seeing the rise of is the rise of the attention economy. This is what we're doing here, right? Yeah. It's attention. Attention is upstream of everything in humans. And so the attention economy, we've seen it with meme coins and other things. I think it's only just starting. All I know is we've got a period of time from here to then, it's got 2032, let's give that as the date, 2030, that we can figure some of this stuff out, because you'll see the changes happening faster and faster and faster. All you need to do is say, listen, what you're doing there is you're taking away that probability of the long-term trend bailing you out. Right? If the number go up over time, this number does not go up over time. So therefore, say, okay, I understand what I did. I got too greedy with my mental model of I can make 100x. Like one of the tokens I was in last year, and sort of still, it's my main holding, is Sui. It's a big project that came out of Facebook. It's not a fly-by-night thing. I mean, that did 5 or 6x last year. Solana did it the year before that. So, okay, that's a lot easier. So then let's say you don't enjoy the time horizon that I do, which is actually doing nothing. Most people want to do something. And it's so hard for people to have a longer-term time horizon. Because also when you go on crypto Twitter, which is where everybody hangs out, it's all about short-term trades, P&Ls. It's the top, it's the bottom, and all of that stuff. But then if you think about it, you just think, okay, so I've got this long-term trend. I'm going to put some of my capital into that. I would put 90% in, but you want to trade. I get it. So then put 50% of your capital in the long-term trend. So that's your long-term book. Leave it aside. You got your punting book, which is 10%. The middle, you say, okay, I want to swing trade. So what you can do is then say, well, if the market is skewed in an upward direction, then I'm going to buy dips and then flip out and look for the highs. Never short the highs. Why would you short the highs in the fastest appreciating asset of all time? So then now you've got a system that is simple to explain to yourself. And then whatever indicators of using technicals you want to use, whether it's oversold RSIs or whatever indicators you use, it's really simple because you have one thesis that this thing is going to trend over time. You've got your long-term book, you've got your short-term punting book, and the middle you can swing trade and try and capture the trend. So when I talk about a long-term trend, well, the probability of it going up tomorrow versus today is higher, which is much better than if you're trading a short-term chart, which could be moving around. So your probability goes up. That's all it is. And you have to understand that the probability of trading is, most of the best traders in a shorter term time horizon will be at best 50-something%. Analyze the trend, how long is it going to last, and choose the best asset. Because they're all being driven by this one dominant macro factor. And this is the key to everything I'm doing right now. As I said, I used to run these broad diversified portfolios, hedge fund portfolios, which is I found out that the printing of money to pay for the debt that's been accumulating, they've had to print money and that debases the currency. So that means there's more and more currency every month or whatever. And what that actually means is the value, the purchasing power of the currency goes down versus scarce assets, equities, crypto, housing, all of that stuff. That's the kind of dominant factor. But it's so dominant that it explains 97.5% of all the movements in the NASDAQ over the last 12 years and 90% of Bitcoin. So you've got the single most dominant factor in the history of markets at play. So you only have to look at one thing, really. The rest is noise.
Raoul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices. He believes that by the end of 2025, over 1 billion active wallets will exist, the fastest wealth creation curve in human history. And as institutions, pension funds, and sovereign capital step in, the next 12 months could mark the start of a new financial era. So when people say the cycle's ending, Raoul Pal says the opposite. It's just beginning. This, right now, is where the banana zone truly begins.
So we've got these megatrends. We've been debasing currency, printing money to kind of offset this massive debt because of the aging population that's slowing growth, and the governments try and keep growth up by creating debt. Are they printing more currency? And therefore it makes all the numbers go up, except really cyclical stuff, oil and stuff like that. But generally speaking, it does that. So then if everything is being dominated by this one macro variable, then all you need to do is, what is the fastest horse? And how I do that is I divide one asset by another. So I'm looking for what's going to outperform Bitcoin, because that's the benchmark asset. And that's what got me into Solana in 2022, 23. The chart pattern looked like it was going to base, and there was a good chance that was going to work. And then my switch from Solana to Sui, that did the same thing. If everything's being driven by the same thing, by the fastest thing, that's not too far out the risk curve. That's it. And so you don't have it's going to go to zero risk with those assets because they're proven large assets. And that's the best way of capturing it. So that's all I've done. So I've made, since 2022, I've made 2 asset allocations, which is a switch into Solana at the lows, and then out of Solana into Sui, and that's it. And I've also do a bit of the punting for the fun, because your friends you're seeing on crypto Twitter all day. I looked at every single one of those kind of highly speculative bets. They all lost money, every single one. Some of them went to zero. The rest of the book, amazing. Now the issue is most people don't start with any capital. That's the hard thing. And so that's why everybody looks for the 100x, because they don't have any capital to start with, because people's wages are like not high enough compared to the cost of living. I totally get that. And then that forces you to go out the risk curve to get any capital. I understand it. But if you do get any capital together, I'd rather you did a second job and put that money into trading than just go out too far on the risk curve and miss the opportunity set. Because the opportunity set is the longer term thing. So if you've got a second job or a third job, do whatever you can using your skill set where you can make a bit of extra money, stick that into your investing book. You'll get it over time. But if you keep trying to get the 100x, you'll never get past the I'm paying my bills at the end of the month idea. And I know that is the hardest thing, starting from nothing, getting somewhere. It is really, really hard. In crypto markets, the other risk that you're going to go down is you're going to use leverage, because it's so available. It's so available, and it's much easier than trading futures. It's just so there. You can use it intelligently, so maybe you juice your returns, but I'm talking about 2x or 3x leverage and not 20x, 50x, 100x, because that's back down here where the probability of losing all of your money is about 90% or 95%. Another way of approaching it is forget crypto. The other thing that we've seen a huge move in the US towards, same generation, is stock options. You have a defined risk reward. You've got globally knowable, understandable group of companies that are moving fast because of the technology of it, and you've got a defined risk reward, and they're trending. So now you're looking for acceleration points if you're buying calls. Okay, maybe that's an easier way to get that capital a bit faster, because you're not here with the stuff just goes to zero all the time because there's no trend. You're buying Tesla, let's say, call options, and what you're trying to do is use your trading methodology to look, will it accelerate beyond the strike price of this option versus what I pay for it? Okay, that's interesting. And Robinhood makes it so easy, and you can do it in small size, and you can make some big returns. So now you're not trading something speculative, you're just now betting on time horizon and price. It's hard. Options are no free money. They're really hard. But it's a good place to start, because you can stick your $100 in to a call option on something. You'll learn a lot from it. And it suits a shorter term time horizon. But if your time horizon is like you're a day trader, well, a 1 month option is like a long term bet for you. It kind of teaches you also to think about different time horizons.
Pal stresses this pattern is normal and necessary to flush out weak hands and reset leverage. He highlights Bitcoin's high correlation to global liquidity, which remains supportive even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. The banana zone is alive, just misunderstood. As the momentum in the crypto market is building and institutions are positioning themselves, Raoul Pal says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. He says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He recently shared his take on the current economic uncertainty, with tariffs and recession fears creating market volatility, that a major market rally is on the horizon. And that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. So we could see a sharp recovery in the next week. The bottom line, Bitcoin's next big move depends on how this plays out.